Welcome to our Friday Market Insights video for January 8th, 2021. We're back after a few weeks on hiatus. My name is Mary Lou Miles, Partner and Director of Wealth Management here at Genis. Once again, I'm here to ask Wayne Wachell, CEO, co-founder, and Chief Investment Officer, a few questions. Wayne, there's been so much happening this week. From the market perspective, the S&P 500 closing 2020 with a 16.32% return, and the S&P Toronto Stock Exchange up 5.6% this year. What's happening overall for stocks at the start of 2021?
Well, first off, Happy New Year's to everyone. Hoping a better 2021 than 2020. Well, we're starting off with the same momentum we ended the year with. Hope. There is hope out there in 2021. That's the big year. This year's going to be a year of hope, I think. We'll see how it ends up, but so far so good. Market started off actually up. Up for the week. But if you look internally, things were going on. Bond yields rose quite dramatically, and it was more of a move towards value and the cyclicals doing well within the market, and growth and technology not as doing as well. So a bit of internal things going on there, and we can get more into the details and why these things are happening.
So given our view, what changes have we actually made in clients' portfolio to reflect that?
Well, we've been moving, taking money off the technology side, moving it more into the valued areas and financials, cyclicals, materials, industrials for the past 2-3 months. We did a bit more of that at the beginning of this year, just pushing more into that expectation that we will have a recovery this year. Well, looking through the clouds right now of COVID and having stronger growth later on this year as a stimulus, and the vaccines kick in later on this year.
So most of us were glued to the screens this Wednesday watching the events unfold in the U.S. What is the impact of the January 6th violence and Capitol Hill longer term for the market?
Well, it was very disturbing. I found it very disturbing and unsettling actually to watch it happen. It affected me all day. But to the market, it was really a nothing burger. Let me explain. Typically when there's tension, political tension, the markets seem to look through it. If you look at wars, when the first cannon is fired, the market takes off. And in some way, this was maybe a cannon that was fired politically, and it really broke the back of the Trump resistance, I believe. And also was that the Democrats won the Georgia Senate, both seats, which was even bigger news in terms of more stimulus coming down the road. So, it's unsettling, it's disturbing, and but from a market perspective, it's seeing right through this.
Yeah, it seemed like the market reacted more to the non-farm payroll numbers today than they shrugged off all the other events this week.
Yeah, and speaking of non-farm payrolls, they were below expectations. The shutdowns are having an impact on that. But if you look internally, the numbers weren't that bad. The jobs were coming from restaurants and the service sector, but manufacturing, home building, those kinds of areas are still robust and strong. And through the course of this year, as the vaccines hit and the stimulus hit, so their service sector will come back. So there's a good base in the economy, I believe. The economy has adapted. People are still working, and so it's, we're waiting for that one. Last couple of pistons to kick the economy later on this year, which help get more growth next year, or this year.
Yeah. The Georgia Senate election this week means President-elect Joe Biden will have a Democratic government, including the House and the Senate, when he takes office January 20th. What impact will this have on the stock market longer term?
Well, after November the 5th, I said the center held. Well, the center held kind of, and let me explain. There's people are calling this a blue wave. It's not a blue wave. It's a blue ripple. The margins are razor thin in both the Senate and the House, and that's going to constrain the Biden administration in terms of what they can do. They have to really focus on the Senate. They have to get those votes in the middle to get things done, and that's a good thing. And I think the market is seeing through that. So it's saying we're going to get more stimulus then the case if the Republicans held the Senate. So we're going to get more stimulus, which is a good thing in the short term, at least. The longer term, we have to pay for all these debts, but in the short term, it's a good thing. And I think it's going to, so we get the spending, but we don't get any sort of far left policies. So there should be some moderate tax increase, I would expect. But I think this coming Congress is going to be driven more by the moderates than the extremes at both ends of each party. And remember, in the US, it's amazing, there's a congressional election in 2022. That's in November of 2022. That's less than 2 years from now. So there's going to be people that are going to have to want to get things done and come to the center, I think, is the next election's upon us. And so that's why the market responded so positively. We're going to get more stimulus, and we'll deal with the problem that longer term, but it's going to help the economy in the coming year.
The rollout of COVID vaccinations by country, we were talking about hope earlier in your video, in the comments in the video, with the exception of Israel, seems to be lagging. And now we have the new variant spreading around the world. Is there a risk to first quarter global GDP estimates?
Well, as I said earlier, the core of the economy is still strong. The economy has adapted. The rise in COVID right now and this wave here is going to drag things down a bit, but still the manufacturing side is strong. The housing side is very strong. When people buy new homes or move to a new home, they tend to buy a lot of things in that home, including furniture and everything else. So, and people are still working. And also the workers, look at the inequalities here in some ways. The workers that make larger salaries in the information sectors are still working. And the people that have been hurt the most are the low income earners, which don't make as much money. And so majority of the money out there in terms of for consumer spending is still doing okay. And there's an inequity there, obviously, but in terms of the overall economy, it is a plus for the economy.
So it continues to be the Main Street, Wall Street story.
Yeah.
How is the 2020 recession, which seemed like a blip, actually different from this one in 1980, 2001, and 2008?
It was, well, let me give you the analogy of an airplane. Normal recession, airplanes flying at 40,000 feet, hits a recession, goes to 35,000 feet slowly, and then comes back out very slowly, back to 40,000 feet. In this recession in 2020, they turned the engines off and the plane dove quickly from 40,000 to 20,000 feet and then hit a bottom and started diving or rising very rapidly. So they turned the engine off, it dove and it came back. And so, but we're still not as high. We're still not at 40,000 feet. We probably won't get to 40,000 feet again until probably 2022. So that's the issue there. It was very quick and hard and versus gradual from previous recessions.
Thanks, Wayne. As always, lots to think about on all of these subjects here. So that concludes our video for this week. Thank you so much for watching. Please do reach out to your portfolio manager if you've got any questions. And for those of you new to Janus, please click the link on our website and one of our team members will get back to you. On a personal note, as of this week, this is my 16th year at Janus. So Wayne, I've worked with you for a long time, and I want to thank all the clients I work with and the team here at Janus for their support. It's the reason I continue to love what I do. And as we head into 2021, with the hope that we talked about earlier of a successful vaccination rollout, longer days of sunlight, and the possibility of seeing each other in person later this year, we wish you all a happy new year. As Dr. Bonnie Henry, the BC Provincial Health Officer says, be kind, be calm, and be safe, and we'll see you next week.